So do these moves in volatility and rates signal deeper concerns lurking beneath the surface? Guy, what do you think?
They should. I mean, yields are going lower because it's a perceived flight to quality. We can probably all agree or disagree on that, but I think that's what's happening. But on a 40-point handle day lower in the VIX, on the S&P, understanding that from high to low it probably reversed about 100 handles, there's no way the VIX should be at 25, in my opinion. So it is clearly trying to tell the market something. And this comes in the wake of last week's reversals that we talked about, some of the fundamental and technical damage it's done. And the fact that gold had the move that it had on a risk-off day is absolutely concerning. So, yes, I'll think this will be a day or a week or so that we'll come back to in the months to come and say, the market was trying to tell us all something.
Yeah, and I don't think it's about shutdown or tariff fears. I think the market has been pretty comfortable with that, right? So we had all that going on, and we had a VIX grind down to like the mid-teens or something prior to that tape bomb that we had on Friday. Obviously, we're going to talk about this regional banking thing. And, to be hyperbolic about this and what's going on, this is probably a bit too early. If we take a page out of the playbook from March of 2023, we kind of know there's going to be some support for this thing, right? They're going to kind of figure this out. Some of the numbers that we're hearing about for these smaller banks don't seem to be particularly large. They don't seem like there's going to be systemic sort of risk. And I think maybe it's too early to say that. I'm not a bank analyst or, look at these things pretty closely. But the only thing I'll say is that if we're about to lose a couple of these banks and then it looks like further than May or March of 2023. I think we lost a bank in May of 23 after a few. Then you have to say to yourself, what saved us back then? Yeah, there was a little bit of QT, but it was really the interest in this AI trade. And at this point, I don't think AI can save this sort of situation. And I don't mean to sound so dire, but look at the way these stocks traded. Look at the way it took down some of these large money center banks, especially after what we heard from them earlier in the week. So it just feels like investors are looking for reasons to kind of sell right here. But when you see the sort of pain that we saw on Friday and then here in other sectors, that should get your antennas up a little bit.
Yeah, I think you're right. People are looking for a reason to sell. I mean, the markets have done so well this year. At some point, you're going to see some profit taking. But I also think on the flip side, you are seeing these large amounts of cash that are sitting on the sidelines. And a lot of that is from institutional investors, just still left over from Q1 and Q2. They're hoping for some sort of 10% correction that they can buy on because they don't want to be sitting on this cash if markets keep going straight up. I think that's why you're seeing these up and down moves, because you're going to continue to see these dips bought. So I actually am not overly concerned about this. I do think you're going to see some profit taking here, but I don't think this is going to be longer lasting.
So I'll go back to yields. I think it is safe haven. I think it's about China. Maybe a little bit about government shutdown, not much. Also, the Fed's going to be lowering rates. I think yields are probably getting ahead of that. And what else are they going to be doing? Ending QT. So I think the market's getting ahead of that as well. Do you know it's rarely that you see the 10-year below the Fed funds rate? And we see the 2-year really goes in lockstep, but it's rare that you see the 10-year below it. So that dropped as soon as they started to lower rates. We went from 4.25% in the Fed funds rate, and you saw the 10-year drop, and now it's below 4 or around 4. But the Fed funds rate is around 4.1. So I think this is all normal.
It's all normal. No biggie, huh, Guy? No big. I mean,
when the bond market, maybe it's normal. Fed can do what they want. I think rates are going lower because people are scared of something. And I think that's what the gold market's been saying for a while. I think it's this flight to perceived quality, which may or may not be the right thing to do. That time will tell with that one. I'll say this to Dan's point about the banks. If things were as robust as the market until today suggests, KRE should not be at levels we last saw in August, the all-time high being made 3 years or so ago. Think about that for a second. So if you have all this M&A activity, if the bank, if the
things are so
environment
great for the large money centers,
they should be better for the smaller banks, and they're not.
So